What's up guys, and welcome back to a very important video, because today we are talking about one of the most important topics, maybe the most important topic in the crypto market, and that is the exit strategy. If you're a follower of my channel for a longer time, then you know that I have already made a video about this topic, but right now we are more forward in the cycle and we have more data, so I can give even more details about my exit strategy and add more information that will be very valuable for you. So I can just recommend in your own interest to watch the whole video till the end, even if you have watched my last video about my exit strategy. Besides this, I will still add timestamps, so in case there are any parts you want to skip, that you can do so, but as I said, I can just recommend you to watch the whole video till the very end. And without further delay, I would directly jump into the first topic: why you should have an exit strategy. That's the important question. Why you should have one and why it is so important. The answer is obviously and simple, but just very few really think about it. It is so important to protect your capital, to protect your gains. There are lots of people, probably also including you, that will make a big fortune in this bull cycle. A fortune with they can realize dreams, whatever that may be for you, a car, a house, a dream vacation. But unfortunately, the most make this fortune just to lose it again, because they not see the importance of this question: why should you have an exit strategy, and therefore don't have one. Right now, maybe the hodlers will say, well, for me this is different, and I agree on that. Yes, for you it is different. If you want to hold your crypto for the next 10 years, then feel free to do so. But personally, I don't want to lose 80 to 90% of my money, plus have the uncertainty of the future in cryptos, because your coin, even if it is high ranked, can disappear. We have seen this in the last cycle, and very likely we will also see this in this one. That is why I can just recommend including all of this in your thoughts and strongly consider to have an exit strategy. A very important topic that I also want to cover is the psychological aspect, which is in general the most important in trading and investing. I am sure you already heard that, but with talking again about it, I would love to achieve that this will be more present in your head again, and you can prepare, because you should prepare big time for your exit. You will become greedy and can't get enough. That is just nature, so we don't need to hide that. That is totally normal. That is in extreme situations like that. You will become greedy and your brain is putting the worst scenarios in your head, but unfortunately the worst scenarios of missing out, more gains, and not of losing it all. You will get the thinking, this time it will be different. Maybe you also will find videos, articles, podcasts, or whatever with reasons why this time it will be different, but the reality is that with the highest probability it will not be different. People said that in the year 2000 and 2008 in the stock market, 2017 in the crypto market, and they will say it again. But you have to be clear that it's the most unlikely scenario that this time it will be different. And even if the case really plays out that this time it will be different, you would sell at an extreme overvaluation, and that is nothing bad. So that is something you should prepare for, that you know that your brain will trick you, but the nature of your brain is the enemy in this market. That is why this business is so hard, even if it seems to be super easy. And if you need support in that, then first actively improve yourself in it. Be as reflective and honest to yourself as you can. But of course, it will take much time to handle this problem, and it's a problem you will constantly be working with, and it will never stop. So it is no problem you can solve and then it's gone. It will come over and over again. But the end of the bull run will be not in a couple of years, it will be way earlier. That is why you can also just simply search for a person that makes you overcome that. maybe just a friend that is also in crypto, and then make a deal that when you see it is close to being over and one of you will not sell, make an agreement that the other one can slap you in the face. And I not mean a light slap, I mean a very hard slap, as hard as you can, otherwise you will not wake up. Make that agreement with a friend. You can also do that with a friend that is not into crypto. Likely then he will also even be less attached and can see it more rational, but long term it is of course the better way to learn it for yourself. Now, before we are taking the dive into the crypto data, let us have a quick look where we are currently at, because there are still many people out there that don't trust this market right now and believe that we have already seen the top and currently just doing a rebound. And so far we also not have the confirmation that this bull market is still on track, even if a couple of coins have already made a new all-time high after the correction. The biggest ones, so BTC and Ethereum, have not made a new all-time high. Also the total market cap and the altcoin market cap have not made a new all-time high. However, there are several factors and indicators that show that it is the most likely that we not have seen the top of this cycle. Some of them I will also show later in the video. With this point, I just want to say that my highest probability is that we are still in the bull market, and later in this video you will see the reasons why. And now let's go into the crypto data and the exit strategy. First, we have to know that the crypto market is moving in cycles. Better said, so far in the boom and bust cycle. If you are not familiar with that name, that is basically just saying that we have a huge increase like in 2016 and 2017, the boom, followed by a bust where 80 to 90% of the value will be wiped out, in most coins even more. To give you a little example, Ethereum, the currently second largest cryptocurrency, lost 94% from the last crypto top to the bottom. Now of course the question is, how can I identify these cycles and how can I use them for my advantage? The first step is of course to know that there are cycles, which by now should be the case. And the second thing is to make the decision to act when the cycle is over. Otherwise you are not getting an advantage and fall into the hodl strategy. That are the first two steps. Now let's take a look into actual indicators and methods that helps to find the exit. There are of course many indicators that you can use. I will show you now the indicators that I find the most valuable and that you can also combine. I will show and explain that to you right now, exactly how you can get the most out of it, and also all the indicators are linked in the video description. The first one is the Bitcoin rainbow chart, where you have a logarithmic scale with colors that show price undervaluations or overvaluations. The advantage is of course it is super simple to read and have a good track record. The disadvantage is that the price didn't have to hit the upper band. It can peak out before, but also can peak out above the upper band. The same thing is also counting for the Ethereum rainbow chart. The reading and the indicator in general is the same. So here we have the same advantages and disadvantages. Now we are making a quick jump to the next indicator before we are coming back. The next indicator is the Trololol chart. This chart was developed by someone called Trololol, and now it's continued by Mark de Mesel. Here we also have a logarithmic scale that is showing under and overvaluations. The big difference here is that we are capturing the whole market cap and not just the Bitcoin or Ethereum price. At the bottom we can also see very good the boom and bust cycles going into extreme overvaluations, then back to extreme undervaluations, back to extreme overvaluations, and so on. An important thing we can see right here in the chart is that the overvaluation is going down in each cycle. First we reached 2000% overvaluation, then over 1400% overvaluation. In the last cycle, just 1000% overvaluation. That means, according to the Trololol chart, it is likely that this decrease of the overvaluation will continue, and we should peak out somewhere between 600 to 800% overvaluation, which would indicate that we would reach a total market cap of between 6.6 trillion to 8.8 trillion if we are going with the expectation that we are peaking out somewhere around the end of the year. That is, by the way, also one point that I mentioned in the beginning of the video, that we have not come close to this overvaluation targets, and from this perspective it would be unlikely that we have seen the peak of the cycle. But now let's go back to the Bitcoin and Ethereum rainbow chart. As I mentioned, the charts are pretty simple to read, but of course also they have their weaknesses, because you don't know if the peak will be in the uppermost band, over the uppermost band, or under the uppermost band. But an important thing that we can use out of the Trololol chart is that the overvaluation is going down, which we also can see in the Bitcoin rainbow chart. The 2013 peak was even above the uppermost band. The 2017 peak was in the uppermost band, while it is very likely that in this cycle we will not even reach the uppermost band. But I will also add some informations to that later on. Before I do, you see that we have combined some indicators right here, of course in a very simple way, but that is already giving an advantage. There's also an index indicator out there that has done that with even more indicators, and that is the CBBI indicator, which includes all of the indicators that you can see right here, takes a look into every indicator and what the indicators are saying, how likely it is that we are at the top. In the end, putting all these numbers together and creating an own index number that shows the likelihood that we have reached the top, which is also a good idea from Colin Talks Crypto. The only thing that I see as a problem right here is that it is a Bitcoin indicator. I know that is exactly what it meant to be. It's called Colin Talks Crypto Bitcoin Bull Run Index and not Crypto Bull Run Index. For me as an altcoin holder, of course, BTC is an important indicator, but not just the Bitcoin price. That is why we are going now into my historical data research, which gives some important data that we can use. The first two things are, of course, the time point and the total market cap. This can be calculated out of the last cycle, and when we continue this pattern, this brings me to the time point end of the year and a total market cap at this time point of 10 trillion, to be exactly 10.45 trillion. But we have learned out of the Trololol chart that the overvaluation is going down in each cycle, which would then mean we would not go to 10 trillion, because 10 trillion would be almost the same overvaluation as in the last cycle. And that is why I don't go with a specific number. Instead, I go with a range, and that range is between 7 to 10 trillion dollars in the total market cap. We could also be exactly right now and say 6.6 trillion to 10.45 trillion, but let's keep it simple and say 7 to 10 trillion in the total market cap. These are the first 2 points. The next important point is the Bitcoin dominance, where I have also done my research on, and here we also have a clear and unbroken pattern, which is that we are reaching a new low in every cycle, which, if you just logically think about it, makes absolute sense. More and more coins are on the market and also gaining more attraction, so the market dominance in bullish times is shifting from BTC into altcoins, because investors are willing to take more risk in smaller projects. Important here is the target that the Bitcoin dominance is aiming for at the peak of this cycle, and when we are going into historical data, we can also calculate that, and that is bringing us to a Bitcoin dominance target of 18.28%, which is again a specific number. And here I also go again with a range, and that range is between 15 to 20%. If we are just seeing this, then it very quickly should be clear that it is very unlikely that we are hitting a $200,000 or $300,000 Bitcoin price this cycle, which is also the thing that quickly brings us back to the Bitcoin rainbow chart. There, the upper band at the end of the year points out a Bitcoin price of more than $180,000, which is very unlikely and also supports the thesis of also another decrease in overvaluation in the Bitcoin rainbow chart. We have something similar in the Ethereum rainbow chart, where the upper band is pointing out an almost $15,000 Ethereum, which is more probable than an 180k Bitcoin, but still unlikely because Ethereum would have to outperform strongly. So here it is also likely that we will not hit the upper band. And now we are coming to the most important part of my exit strategy, and the indicator that I give the highest value. The indicator is our self-developed buyer index, and I want to show you why I value this indicator so much. But first, let me give a quick basic understanding of this indicator. This indicator is displaying to us how many buyers are in the market, and of course, the more buyers are in the market, the closer we are to a big correction. On the other hand, if we have just very few buyers in the market, we have a very good buy-in signal. Here in the buyer index, we have the critical or dangerous levels, which starts in this chart at the +5 level, and everything that is above these levels are critical levels. We have seen these dangerous levels 2 times in this cycle. The first time it was right before the major crash in March 2020. Here you can see that the buyer index has already arrived in the middle of February, so early enough to warn us before the crash. Then after the crash it has given a green light or a very big buy-in signal, because we have seen extreme low levels, and that is not hypothetical. This right here in March after the big crash was my biggest entry in this cycle. Then the second time the buyer index hit these dangerous levels was in the beginning to the middle of April this year, so right before the big correction that we had in May, where BTC corrected from 64k to under 30k. Of course, this indicator is also showing good entry points, as I have showed in the March 2020 example, but entry points are not the topic of the video, so let's focus on the exit again. As I have said, I value this indicator the most because it was so accurate in this cycle. So for me, there is a big proof in this indicator. But let's get to the topic of how this indicator can improve my exit strategy. This is probably exactly as simple as you may expect. Now with this indicator, I am waiting for the dangerous levels again, and once we are there, there is also one more important thing, and that is that when we will reach the critical levels, this doesn't mean we have to crash immediately and that it's over immediately. As you can see, the last 2 times when we hit the extreme dangerous levels in this indicator, we still had some time. But I also have to add right here, the last times we hit the dangerous levels, we were not at the peak of the bull run. So with my experience from the last bull run, I think it is very likely that we will not have as much time as the last times where we hit the critical levels, because of the reason the next time we are hitting these levels again is when we are close to the top, and then everything will move a little faster. But even if everything is moving a little faster, this not means that the whole market will crash immediately, which means when we hit the dangerous levels, we will still have some time. Now let's check out the possible scenarios that we have that could play out. The first scenario is that we are not reaching a market cap target between 7 to 10 trillion, and there of course is the question, what would happen in this case? Let's imagine we would see the market cap just going to 5.5 trillion. Then it is still very likely that with the buyer index we can see that, and that very likely once we are at 5 trillion, for example, so in the total market cap, we would already see that the buyer index is close or already at dangerous levels. And no, okay, right now it is time to leave the market, even if the Bitcoin rainbow chart, for example, is still far away from the upper band. The second scenario is of course the best scenario, and that is that we are peaking out in the expected range, which would mean between 7 to 10 trillion, and this range is still very wide. We have a 3 trillion range in here, but if we are there, then we have a lot more warning signals. We will have the Trololol chart that is going into the overvaluation target levels. We have the rainbow chart coming in the expected band. Don't forget, this time it is very likely that it will not be the upper band. And of course, we also have the buyer index that is showing us when the time is right to leave the market. The third and last scenario is probably the scenario everybody dreams of, but at the same time, it is the most unlikely scenario. It is that we would extend this cycle in both factors, time and market cap. It is very likely that the longer the cycle goes, also the higher the market cap can go. So for this scenario that we should overshoot the 10 trillion in the market cap, it would be very likely that we would also extend the time point where we are peaking out. So it is highly unlikely that, for example, when we would peak out in November, that we are overshooting the 10 trillion in the market cap. Therefore, when we would peak out in March 2020, for example, so next year, then this would be more likely. But as I mentioned in the beginning, this scenario is the most unlikely scenario out of these three scenarios, because we have patterns that are unlikely to break. For example, the overvaluation is going down over time. However, we want to make clear that when this unlikely scenario plays out, we are not selling at the 6 trillion market cap when we are going to 12 trillion market cap, for example. So how are we doing that? In case we should go to the valuations of 12 trillion, then we are warned in probably all common indicators. Likely we are very high in the rainbow chart, in the stock to flow model, in the Trololol chart, in the Colin Talks crypto indicator, and many more. Also, we are highly alerted with the market cap target and with the time point. Just one puzzle piece is missing that we are waiting for, and that is the buyer index. It is the most likely that we are reaching critical levels before we are peaking out, which means if we don't have critical levels, it is also unlikely that we have peaked out yet. However, is it smart to not sell at, for example, 10 trillion market cap with the buyer index not at critical levels? Absolutely not. When we are at 10 trillion, for example, and hit the highest expectations, it is a smart move to take some chips off the table and sell a decent amount. How much? That is something I would judge depending on how high the buyer index is. The higher the buyer index is, or the closer it is to the dangerous levels, the more I would sell. But that is something that can just be clearly said once we are there and once this unlikely scenario would take place. The most important thing to these three scenarios is that in every case we are secured the best way possible, that we not miss the exit. You know, nothing is guaranteed on this planet, but we can go with the highest probability, and this is the way with the highest probability for me. Another question that I quickly want to address is if we will have 1 or 2 alt seasons, where the better question, or more important question, is if BTC will peak out before the altcoins does. And that is something that is likely. So it is likely that BTC peaks before the altcoins does, but of course it doesn't have to. And now I want to show you my way how I get the highest probability again, that I can identify which is the case. As I have mentioned, I have a Bitcoin dominance target, which plays a very important role in this question, because let's imagine we are at 6 trillion in the total market cap, and we can see that the buyer index is at critical levels, but the Bitcoin dominance has not made a new low. Then it is very likely that we will have this little time left that I mentioned earlier in the buyer index. So when the buyer index is achieving these critical levels, that the market will not crash immediately. Instead, it will give some time, and then likely in this time altcoins will continue to go up and also will push the general market cap more to the upside. On the other hand, if we are, let's keep the 6 trillion market cap scenario, we are again at the 6 trillion, the buyer index is at dangerous levels, and the Bitcoin dominance is, let's say, at 20%, then still very likely that we will have some time to react before the market will crash. But then it is also likely that not much will happen in the altcoin market. Also here it is smart to take some chips off the table once that is happening. Despite from where the Bitcoin dominance is standing, remember, securing profits is the most important thing that we want to achieve, and we want to achieve that we are selling as much as possible at the best price possible. And when we have a signal like that, so when the buyer index will hit extreme dangerous levels, it is smart to secure some profits or all profits depending on the situation. So we can summarize: I have a time target, I have a market cap target, a Bitcoin dominance target, the common indicators that I have showed in this video. But even with all these, it can still be that something is not on point. It can be that the time target is not right, that the market cap target is not reached, the rainbow chart will not hit the upper band, which in this cycle is very likely. What I want to point out is that there can be deviations between expectations and what really happens. And that is why I have my backup plan, the buyer index, that has done a phenomenal job in this cycle. And the highest chance is that it will continue to do that. And that is why I give it the most value in my exit strategy. And if you want to check out the track record of the buyer index, then feel free to do so. As I mentioned earlier, I have managed to get great entries in the cycle, for example in March 2020 after the crash, or in October 2020 right before the big rally. But the buyer index also warns us before upcoming bigger corrections like the one we had in May this year. And you can find all of that on my channel, so I invite you to check the track record of this index. My mission, of course, is to keep you updated, and I am providing the most of my content here for free on YouTube, but I also have a Patreon account where I provide more content, especially about the buyer index and the current market situations. All this you can find on my Patreon live and in real time, so check that out. It is the first link in the video description, so there you get a lot more value. There you can make sure that you are always up to date in regards to my exit strategy. You support the channel, the community, and that is a win-win situation. In the end, I also want to say that, of course, even if this video was a little longer, it is still a compressed video and I cannot add every tiny info. So if there are still open questions, then just feel free to write them down in the comments and I will answer them. In case this video was helpful, then please leave a like and also make sure to subscribe to this channel so you won't miss out any future updates. And of course, make sure to check out my Patreon account. That's it for this video. See you in the next one, and as always, have a nice day.